Hi, what up, guys? Making another video on my trade recap from yesterday, which was Friday, December the 5th. And I took a trade on gold and Nasdaq. I'm gonna show a recap of those. Both of them had the similar thought process. But here, as you can see, I actually have a screenshot of my chart that I took before this trade happened. As you can see, I was kind of predicting this move to like come bounce on this inverse fair value gap prior to making the highs to buy side liquidity, which is what happened here. So I'm gonna get rid of this at this point. We don't need that no more. And let's get into the trade recap. First, I'll do gold, and then we'll take a look at NQ. NQ is a little more interesting. This one was a little this was pretty standard. Okay, so first we gotta look at the higher time frame, right? So if we're looking at this, oh, another key point on gold. We've been ranging for I don't know how long this is, this whole week essentially. We've been ranging for gold. It's pretty noticeable on like any time frame. Like this is not any movement you want to be a part of, so I've been trying to stay away from it, but I could not help myself based on how clean the setup was for that trade. But generally speaking, when you see something like this, you don't really want to go enter any position. But I didn't, nevertheless. And I was just really confident on this draw right here, the buy side liquidity. It's more obvious when you go on down to the 1 hour. You can see like these double highs. There's like a little bit of like a fair value gap for the hourly. So I just felt like we're pretty sure, especially how we were respecting all the bullish um, PD arrays. So I was pretty sure we were going to hit that buy side liquidity before we potentially make a move lower or continue higher. So with that, the M15 it wasn't doing much for me, I guess. The M15 was okay. I think it was more really on the M5 is where it made so much more sense. So if we come take a look at this, we're seeing right off the bat, we're seeing like we get a sweep here, we get a shift many market shifter structure. We have this is on the M5, so what we're just anticipating a pullback to hold on one of these fair value gaps or the PD raise. In this instance, there was actually a fair value gap here, as you can see, and then there was another one down here. But the interesting is what I like about it is when the inverse fair value gap overlaps the fair value gap, as you can see in this scenario, it just almost feels like a stronger support point. And then when I saw the wick, it touched the first fair value gap, pulled up. We didn't even have a body closure below. And then you can just see how the next candle prints like bullish. I mean, the safer entry would have been, as you can see here, because this would have uh, been entering based off the FEG closure here, which would have been the safer entry. Looking at a 1 hour here, which was okay. I was pretty okay with taking the risk. Let's go back. So I was able to pull out a 2 hour just because I was more able with the risk, just because of how confident I was on the draw and the market structure leading up to it. So I technically bought early, but I think it was fine. So I think that was a pretty good example of like the continuation model going. Now let's switch over to NASDAQ. This one. Like I said, similar concept. You can already see it here. Tapping the first fair value gap, closing above, bullish entry or bullish 5 minute. We're entering to the confident draw. The key is to the confident draw and not getting like um not psyching myself out in the trade, which is something I'm noticing. That happens pretty often is where like you know where you're going, but you have so many underlying factors that it's pretty much fear interfering with you, and you just need any excuse not to take it, or you need any excuse to pretty much justify the actions of the price action rather than just trying to look at it with a clear mind of what it did and what it looks like it wants to do next. And just trying to like be that straightforward with the trade is really looking to be like the like a better idea going about it. Because I'll get into it, but there's some confusion up here. I will get into that shortly. First, let's look at the higher time frame. So again, what the difference between gold and Nasdaq was Nasdaq's been bullish. Like there's no denying it. We've been just ripping up continuously. So it was pretty obvious the draws are going to keep going higher and higher. This daily fair value gap was such a key level for me. I was so confident it was going to hit that. As you can see, we still have not hit that. I don't doubt that we're going to hit that this following week. Prior to us then manipulate, like this would be the manipulation. Let me just draw it out. Like this would technically, I'm anticipating we're still manipulate to then later distribute, or yeah, distribute. And then potentially the market will correct itself and then we'll make the correct move. But I'm still pretty sold on the idea we're gonna get up here. So with that being in mind, I still had my other targets prior to that, which was this obvious buy side liquidity on the 4 hour, which also, as you can see here, I didn't mark it, but you can see it where it's like a double top. So it was a very key area. So let's just get into this. H1, pretty damn bullish. Like we just wick these lows. Oh, I mean, you wouldn't have seen this candle at the moment. You're seeing the wick, and then you were seeing the start of the reversal. M15 was actually insane to look at. I almost felt like I missed the move when I was looking at M15 when I saw this like V shape right here. I thought that was it, and I was like pretty bummed out. And then I saw this huge wick. I guess this huge wick is what weirded a lot of people out. This wick because I wicked London highs and it came all the way back down and closed there. Now I can see why that would happen, why that would weird someone out. The only reason I don't think that was a big issue is that's just one candle in the whole grand scheme of like the whole idea of the trade. So when you look at the whole picture, you're looking at the the market being bullish. We have the draws still not taken. We have this huge reversal shape, V-shape reversal. Looks insane. So this is already like one, two, three, four, five candles on the 15 that didn't make that move. So just based off the one M15, I wasn't sold on the idea. Additionally, let me go on the replay really quickly to show start new. This is where like the sauce comes in. I feel like this is almost like a part where I don't see any other one, any other person on social media showing, but I see it holding true day in, day out, which is this true day open. So on the M5, what we see is we take those highs, we pull back, like I said, to that first fair value gap, tap it, which is, as we know, the first fair value gap that made the leg is the key fair value gap. But not only did it do that, but we wicked back up and the body never closed below the true day open. He used it as support on the next candle, shot up. It was a no-brainer to go long here. The only issue that I had was there was going to be news coming out at 10 o'clock here. So with that, with the 10, I kind of sold it early. I didn't hold it all the way up here. I think I took just a 1 to 1 R. I think I sold it as soon as it made this a new high somewhere here, which let's see. Yeah, just a 1 R. I just took profits there. I don't know if I psyched myself out there because I was thinking a moment if I go break even here. As you can see, if I go break even, news comes out and it's going sideways and like I just felt like it was at least gonna take me out on break even or go to my stop loss if I don't go break even. So knowing that and I'm already up 1 R, I thought it was a great idea to just sell at the 1 R and just take profits and move on, which is why I moved on and then took the trade on gold. But um, that's how I handled that trade. I think I would take this trade over again. Like I'm saying, that M15 was what kind of shook people, but I'm not too worried about it because I knew the overall market, the overall draw, and I had my key little true day open. Last thing I want to show, I feel like this video is getting too long. Last thing I want to show is these candles. See how on the M5 we're looking at these candles? This is an absolute range. There is no reason to look for a trade. Here, like no reason. This is the worst range I've ever seen. When you see something like this, it's when you and then when you see something like this and you go on to like the lower time frame, like the 1 minute, you'll start seeing what you think are setups, but that's literally where the market traps you. And even maybe on the M5, it'll pretend to give you a setup and it'll still mess you up. So, with this in mind, I I know people that took longs here. I actually know people that also took shorts here. Both of them got hit stop loss before the actual move happened. Let me play price a few more. Okay. So, if you took longs, obviously the next draw was did not get hit. But it was kind of on you because of the range. And then I also know people that took shorts here and still got thing taken out because they were looking at the 1 minute. And like I said, when you look at the 1 minute, you're gonna get just clapped up there. There's no point of taking that trade. So I think the only thing that would have made more sense is to potentially go short after maybe seeing this M15 move down. Um, but I'm getting off track. That's not that important. Oh, and the last important thing I want to mention is when a move like this happens, where we already displaced. Let's see how many pips this was. Let me actually take it from my entry. Actually, no. Let's just screw it. Let's just say from my entry, this was already an 80 pip move, but the overall leg push up right here from the bottom to top, this was a 160 point move. So when that happens and the move the move already happened, and then it starts to like trickle down and start to like maybe start inching towards another draw, usually the market's done. Like it already did its move, and this is where you get chopped up. This is usually when I like start to overthink that I miss trades and I'm like I get into FOMO, and then that's when I try to force a trade. Which luckily this time that didn't happen. I was able to capitalize on the move early when it did happen, and then I didn't have to try to chase per se. But yeah, I'm sure this was a long video, but I think it was a good one. Bye.